getting started in multifamily today in this market, how would you get started?
I'd say you're here. You're getting yourself educated, right? You're networking. I think, don't go into these things blindly. There is a fair amount of risk in what we do, but you can mitigate that risk by getting yourself educated. And when I started off 10 years ago, there wasn't nearly the amount of education that's online, the podcasts, the webinars. I mean, look, hell, we're live streaming this right now. People are getting content that I paid tens of thousands of dollars to attain through through masterminds and training programs and just, mistakes that I've made throughout my career, right? So you're living in a great age right now to learn how to do real estate investing and learn it fairly cheaply, I'd say. So start there, start networking. Like I said earlier, it's all about relationships. And this summer, if it told me anything, it validated that statement. There was deals that could have collapsed if I didn't have the relationships that I have in this business. And there was a lot of deals that blew up, right? If you don't have the right lender, or you don't have the right title company, or you don't have the right investors, they're gonna bail at the first sign of trouble. And hell, let's be honest, May, June, things were getting real dicey real quick. I think everybody's kind of getting used to it, but even news today was pretty bad, right? So if you don't have good relationships, those people are gonna pull the plug, and then you're gonna be left holding the bag. So, developing those relationships by doing networking is important too. That's why we're out here, right? We still network. We still like to get ourselves educated. It's an ongoing process. So that's how, if you're getting into the business, that's where you need to start.
Yeah, absolutely. I agree. I think, if you wanted to free dive tomorrow, you probably want to learn how to swim first, right? So it's what in line with what Ben is saying. Education is paramount. You have to know how to evaluate a property, a commercial property, because all commercial properties are evaluated the same, whether they're multifamily or anything else. And so, how do you play with that, right? It's not just us counting on the comparable sales in the area. It's more about, like, obviously the income and the lower expenses and everything like that. So learn about the bones of investing first. You want to learn how to swim first. And so if you learn the basics, you can actually just keep growing bigger and bigger and bigger. Obviously, I'm a fan of starting small. I've always tell folks, start off with a Four Plex, Don't start off with a house or a duplex or a triplex, because you're not going to experience that commercial valuation. You're going to have to do it with a Four Plex and up, right? And so Four Plexes are a very good way to get started. You have a lot of financing products. You have FHA, you have hard money, you have conventional, you have many different ways to skin the cat, right? And so if you know that up front, you can better structure your deals, right? Let's say that, it's very common to have analysis paralysis, right? So much, you're like, oh man, I gotta start off with a 100-unit complex. Yeah, I don't think that way. You know what I mean? Like, yeah, Fourplex is not gonna make you a rich man. Sorry, but it's not. But it will teach you a lot about the business, to the point that you're gonna feel more confident and scale, right? So you just kind of keep that scaling in mind, and eventually you'll get there. Yeah.
Absolutely. No, start, I would say do the Fourplex versus not doing anything, right? A lot of people get caught up in, oh, it's got to be a 30 unit or nothing. Just get into the game. You're going to learn, you're going to make mistakes, right? So don't think that it's all just going to go smoothly. It never does, right? But I'd much rather people take action and have that momentum moving forward than just to sit on the sidelines and think that they're going to time the market effectively. Oh, this is the bottom. Now I'm going to jump in and buy that 30 unit property or whatever it might be, or even the single family home. Doesn't really matter what it is, right? Just get into the game, and you're going to be able to learn and adjust, right? And again, it goes back to having a good team, right? Those people that are on your team are going to help mitigate that risk, right? Because you're going to have lenders, and you're going to have title people, and you're going to have other people that are going to be a part of your team that might say, man, run away from that deal. Like, why are you trying to buy that deal, right? So they'll help you too, right? So, at the end of the day, I'd much rather you make that offer or buy that smaller deal than not do anything.
I'll add a little bit. Yeah. So to add to that, me and my friends, that kind of do the same thing, we have a little theory, which means is that you have to be a little dumb to do what we do. You have to, and it's okay. Because the thing is this, think about it. If you knew every single risk of driving to downtown from here, you probably wouldn't do it because it's just so much risk, like the probability and all this stuff, right? And so sometimes it's about, it's okay to not be as, or you feel like you're not ready, but you actually, you are. So have a little confidence in yourself to get going. And obviously, like Ben said, you're gonna make mistakes. But hey, I'm actually 1,200 units deep in ownership, and I'm still making mistakes. So you're never not going to make any mistakes, right? So take that.
Just don't make them the same. Just don't make the
don't
same
make
one
the same
second
mistakes
time, right?
over and over again. And so if you just keep on going, and you have a little bit of faith, and then have that action plan, then you're good.
And you definitely need to find ways you can mitigate the risk to where the mistakes are less painful. Like, you never want to put yourself in a situation where, due to your own ignorance, which that will always be there, and your lack of really just kind of seeing things and game planning properly, that you get yourself in a bad situation. But I mean, like Boris mentioned, you're always going to make mistakes. I made a mistake. I remember my first apartment complex, the biggest mistake I made was not partnering. I went lone gunman. Bought this, it was a $500,000 loan, this 29-unit apartment complex. I think it was like 25 years old, and it was amazing. But I mitigated the risk by buying this thing so ridiculously dirt cheap. It was like $15,000 a door. 2012 prices. But ultimately I knew it was like, hey, I could still screw it up and make money. And I screwed it up and I made money. But you can mitigate your risk in different ways. And another way is, if you want to learn from the sidelines, you can be an investor. Whether you're investing, I don't think I know I wouldn't, like the 19 million over the years, the private lenders that have asked to go and see the house and see the progress, sure, like, I don't care. I'm happy to actually take those phone calls and spend extra time with them. And they're learning for free. Some of them have gone on to buy their own rentals and do their own stuff. Most of them stay passive, that's why they're loaning money out. But that's just another way that you can get involved without taking on all the risk yourself.